first, joining us to break down the study is Bloomberg finance reporter Katherine Doherty. Kato, I mean, these guys work hard. They probably deserve that 10 to 15% pay bump, just given how crazy things have been on Wall Street.
Yeah, it's been super active, and we haven't seen it pull back in any way. So as you pointed out, the traders are projected to see the biggest payouts, some more than 30%. Investment bankers, though, I think that's the story to highlight. This year, we've seen a resurgence of M&A. Deals have come back in a way that we haven't seen, and we've been expecting for a few years now, but now we're actually starting to see the IPO pipeline and some of the other M&A activity come through. So you're expected to see that reflected in end-of-year bonuses. There are a lot of caveats to this report. We still have the remainder of 2026 to get through, so we could see a big pullback and the markets could change. But right now, all things are indicating that the end of this year is looking pretty good across the board.
Got to wonder what oil traders are feeling like in terms of their bonuses this year. I wonder, the part about AI eliminating jobs, and that it makes sense that the higher paid are going to get more for it. But what about the lower paid levels who are still around? Are you going to get people cheaper because there aren't that many jobs?
I think that there's been a lot of discussion amongst the leaders of the big banks that have talked about the moving around of their employees. So when you're talking about maybe those lower paid or back office workers, you can shift some of those folks that you don't need anymore into jobs that still do need a human interaction and can't be taken just over by technology and AI. So I think that is the shift that we're going to start to see. We haven't yet seen a big change in the numbers at the banks. They have not really been adding headcount, but at a lot of them, their headcount has stayed very steady. So there hasn't been a lot of concern, again, yet, that we have seen about massive layoffs. But at the end of the year, this pay is likely to filter into the top performers, and that often is the banks, traders, and investment bankers that we've been highlighting and talking about.
What about the rest of the financial world? Mike and I later in the next hour are going to be speaking to Carlyle CFO, and I know they're talking about how they've had so many realizations they've been exiting. But the rest of this industry, it feels like it's been at a stalemate. How is that reflected into pay, specifically in private equity and maybe other parts of the private capital world?
So private equity, private credit, that is an industry that hasn't seen as much of a boon as we have highlighted in other parts of the market. So I think that is probably the more muted part of finance to look at. Asset management, though, still up as much as 11%, so in the double digits. Wealth management, 5 to 10%. So it's really, if you zone in on some of those markets that haven't seen as much of the activity that we have seen in, let's say, trading or M&A, more of the public market activity. Yes, I do think that's something to highlight as a differentiator across the board.
And I think we're going to have to ask Carlyle if his people are getting bonuses, big bonuses. I think it's inevitable now. Catherine, thank you so much for joining us. Bloomberg's Katherine Doherty. And again, we'll have the author of this report on shortly, as well as that Citadel interview, Carlyle interview. We are going to talk about Citadel, though. That's going to be coming up after this break. Their flagship fund soaring in July after buying a discounted portfolio from the hedge fund Situational Awareness. This is Bloomberg Open Interest.